Thanks for clicking! The Bank of Canada will once again be loaning the bank's money and accepting mortgages back as collateral. This according to an announcement on the Bank of Canada's website. Or, as the media puts it, and while the central bank very temporarily started this program back in August of 2019, the program was ultimately suspended in short order in March of 2020 when the central bank started buying up everything it could get its hands on off the books of the banks. But the program's resumption does raise a number of questions, and not just about the quality of the mortgages the bank is accepting as collateral, but also why choose mortgages in the first place and why now?
I am once again asking for your financial support.
So what I want to do today is go over what the Bank of Canada has been doing, take a look at how this program works, and then go over some implications and some remaining questions. As we'll see today, this is an unfolding story, and although the media will no doubt continue to ignore it, we'll obviously have any salient updates on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, let's get into these term repos. Onto these term repos. First off, what exactly is the central bank doing? Well, according to the Bank of Canada, it's reintroducing 1-month term repos of National Housing Act mortgage-backed securities. Now, recall from previous videos that repo stands for Repurchase Agreement, and NHA MBS are groups of mortgages that have been packaged together into a single security, a single mortgage bond, all of which are guaranteed by the government. So they're kind of like the mortgage-backed securities as explained by Margot Robbie on The Big Short, though all of these mortgages are guaranteed by the government and CMHC. So if they go bad, the government pays.
We'll take care of you, because that's part of it.
So on the one hand, we have repo, these repurchase agreements, and on the other hand, we have these collection of mortgages. And that's what the Bank of Canada is going to be allowing Canada's banks to put up as collateral for 1 month at a time. The banks put up these mortgage-backed securities as collateral to the central bank, and the central bank provides them with a 1-month loan. And the banks promise to repurchase that collateral from the central bank within 1 month's time, which obviously leads to a number of questions.
How are interest rates?
Sure, but related to this specifically, why exactly now? Why is the bank changing its program to allow mortgage-backed securities as collateral? Why is it needing to lend this money out to the banks when the banks still have $72 billion in settlement balances sitting at the central bank? About $72 billion more than they had sitting at the central bank when the program was first introduced back in 2019. CIBC has been claiming for well over a year now that some banks are hoarding money, a point that the bank reiterated back on September 10th regarding reserves when they said that some banks have a lot and some banks have very little. So with that in mind, why does the central bank have to open up this lending when collectively banks have over $70 billion sitting on hand at the central bank? Are some banks short on cash? Do some banks lack good collateral and all they have on their books is mortgages? More on that later. Second, is there a reason that this decision was made so close to the time that the Bank of Canada had to resume overnight repo operations? The bank announced that it would now be accepting mortgages as collateral on September 19th, less than 3 weeks after the resumption of overnight repo loans, which had been dormant for about 6 months. And a further curiosity is why did the bank choose to open up these mortgage repo operations at this particular time? According to the PBO, Canada is set to borrow an additional $68.5 billion in the very near future. So if the central bank needed to have some assets on its books, which is what the central bank will say, then why not just term repo some of that government debt? There's an awful lot of it available. Now, the central bank will tell you that NHA mortgage-backed securities are just like government debt, just as safe since the government guarantees that debt, but they actually yield more than Government of Canada bonds, which is the market's way of saying that, yeah, these mortgage-backed securities are guaranteed by the government, but still, technically, they're more risky. And given that the Bank of Canada wouldn't even take them a few weeks ago, they must think so as well. So it begs the question, if the Bank of Canada needs to get these assets on its books, which it will say it will, then why not just repo up government bonds, which are marginally more safe, and we have an awful lot of them?
I don't gotta explain anything to you.
Well, especially if no one asks. So, in summary, why offer to repo these mortgage bonds now when the banks have over $70 billion sitting on reserve at the Bank of Canada, and why choose mortgages in the first place when there's an awful lot of government debt coming to the market? So those are the why now questions, but there are more concerns, even more pressing concerns, such as What's in these mortgage bonds? As we're all well aware, and we've covered before ad nauseum on this channel, RBC has been issuing loans that it really shouldn't be, relying on blanket appraisals in the funding of pre-construction condos in Toronto, meaning the condos aren't worth the purchase price, they're not worth what people paid for them. RBC writes up a blanket fake appraisal that says they're worth whatever RBC wants them to be worth, and then they're able to issue a loan, issue a mortgage that is worth more than the property's value, meaning the borrower, whoever takes out this loan, is underwater the minute they take possession.
But nothing can possibly go wrong.
Are those the bonds that are being packaged up and shipped off to the central bank? And for this, we have a further question of moral hazard. If I'm TD and I know CIBC has a lot of these things on their books, has a lot of these blanket appraisal, still guaranteed, but blanket appraisal mortgages on their books, I might not be willing to lend to CBC taking those as collateral. I'd rather have government bonds. But now, CIBC can take this stuff, bring it to the central bank, and get themselves a fairly cheap 1-month loan. CIBC or RBC or whichever bank, whoever did these blanket appraisals, has zero consequence for behaving badly. Second, and related, of course, is the worsening housing market. As we've discussed before on this channel, if you bought property after February of 2021 in Toronto, your home is now worth less than you paid for it. Depending on the size of the down payment and when those properties were purchased, a large portion of those properties could also be underwater. Is that what's going into these mortgage-backed securities that are being shipped off to the central bank? I don't know the answer to these questions, and obviously I'm not allowed at the press conferences to ask them, as I don't play the game.
I will do whatever you want. I will do anything.
But for whatever reason, some bank or banks will be going to the Bank of Canada for short 30-day loans, putting up their mortgage as collateral. For whatever reason, those banks can't put those mortgages up for collateral in the market. Now, sure, the Bank of Canada isn't taking ownership of these bonds. These are just 30-day loans for now. But the banks have the option of continuing to roll over these loans month after month after month, in much the same way that whoever was doing the $8 and $16 billion loans did so in the overnight market earlier this year. Meanwhile, they get the cash that they need on collateral that might not be of the highest quality. Collateral just sitting on the books of the Bank of Canada. And finally, at very minimum, this does signify further loosening, stealth loosening, by the central bank, as the banks are getting money from the money printer that they otherwise couldn't get in the market as cheaply. So the Bank of Canada is going to be in the longer term lending business once again, offering up 30-day loans in exchange for mortgages as collateral.
I'll go 275, that's the best I can do.
And this does raise a number of questions, especially with the timing. A, we have a housing market downturn occurring before our eyes, with more mortgages going bad than they had before. And B, if the Bank of Canada just needs more debt on its books to offset currency growth, which the central bank will argue, then why would it term repo mortgages? Why not just term repo the relatively safer government debt, as the market and the Bank of Canada have both shown themselves to think it to be, of which we have record levels coming available? Again, I don't know the answer to these questions, but at least now the table has been set. If some of those who do watch this channel and also attend the press conferences, and I know there's a few,
Not me. Never.
would like to pass these on, I think we'd all very much appreciate it. We will obviously continue to track this story on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.